Pablo, good to see you, dude. How you doing? How you been? It's so hot in London right now. We've never experienced weather like this. Even the miles of CMF. Jason, good to see you. How you doing? How you been? JP, good to see you. How you doing? Evening, brother. How you been? Evening, Pure. Good to see you. How you doing? How you been? Good evening, Miles. Curtis, good to see you, brother. How you doing? How you been? Hi, Miles of CMF. Hope you're well. One love. Good to see you. How you doing? Hope you're well. Also, how you been? Okay, there is a lot of things to go through on tonight's live because some things are starting to make sense, you could say, right now. Good evening, Miles. How you doing? I'm doing great, Cali. Good to see you. How you doing? How you been? Baking, mate. Yeah, 100%. Right now, it's extremely hot in London. Okay, some things are starting to make sense right now to me regarding what the Economist essentially published at the beginning of the year. So we're going to go into that at the beginning of the live show, and there's a lot of other things that are happening around the world which we can discuss as well, which is all having impacts on the market space. Before we go through any of that, welcome to the CMF live show if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles, and I host this live that you're watching right now, Monday to Friday, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much everything you need to know about regarding the world transforming into this digital space and everything else that's happening around you. We also do Q&As on this live as well, which means if you do have any questions, put it down inside the comment section. More than happy to help you out. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF live. If you're watching this for the first time ever, if you're a regular, let's go CMF. And also, I just want to take 1 second just to say thank you so much to everybody from the CMF who has already liked and retweeted this live if you watch this on X. And if you watch this on YouTube, thank you so much to everybody that's thrown a like as well. If you put a comment outside the live, also, that's absolutely amazing. And hashtag whatever you want. Now, a lot of things have been happening that I want to essentially cover at the beginning part of this live show, which is what the Economist essentially published at the beginning of the year. So the Economist magazine essentially cover dictates in a way, in a code of what's going to be coming, essentially throughout that year. So in 2020, they released a cover, 2023, 2024, 25, which is what we're in now. Every year, essentially at the beginning of the year, they release a cover, and pretty much what they release happens. And they release an pixelated cover, essentially, of this is going to happen, this is going to happen, this is going to happen, and so on and so on and so on. When you look at that cover, it shows a picture of an eye, and inside the eye is an atomic, essentially, sign, which means, and I did go back and forth with essentially AI models to see if I'm on the right tracks or if I'm just, essentially hallucinating on this scenario. And at the beginning of the year, I was asked about the Economist cover is what do I think about, regarding the Economist cover? Is it, going to be happening? What does this code mean? And so on and so on. And when I did this back and forward of what my thought pattern is and what AI thinks of my thought pattern, came to the conclusion that we always wanted something major to happen inside the market space. Everything, for the crypto space to become the crypto space, for the world to move on to this digital future, we always needed a major event to happen, something crazy, something big for it to happen, so that we can move on to a whole new financial system. We needed a massive, massive distraction. Well, we're about to get on massive distraction. And on the cover of The Economist, it does show an eye with an atomic sign, which means everybody's fixated on some sort of essentially atomic situation, which is with Israel and Iran. They're having a nuclear war situation. Right next to the atomic eye, there is the picture of charts where the market is going up. Right below that essentially is Trump. These are all indications. And according to essentially ChatGPT itself, essentially the Economist uses code, and its code is never wrong. It's actually on the money, which is, well, let me give you essentially what's happening right now and why I came to that conclusion. The global trade dynamic shift that's happening right now. Foreign exporters are increasingly opting for currencies like the euros, Chinese, Canadian dollars, and Mexican pesos instead of the US dollars due to the latter's depreciation in 2025, impacting global trade dynamics right now. The shift sees major traders and some American importers facing requests to settle in new currencies. Foreign exporters cited pressure from the dollar's volatility and depreciation as essentially deciding factors, and the move reflects a global reaction against the dollar's recent trends and forex markets. Major actions involving exporters from Europe and China were leading this essentially transition. Their preferences for the non-dollar settlements and prompting companies like the Midwest Timber firms to adjust payment methods. First, there was the Midwest Timber Company, an Eastern European machinery supplier, wanted to be paid in euros, and then a California buyer who sources produces south of the border. Immediate effects include increased operating costs for US importers needing currency conversions and supply demands and challenges companies to manage essentially currency risk exposures, altering financial strategies. Financial implications are visible in currency markets, with the dollar losing value against several major currencies. Political discussions around essentially this trend are emerging, prompting scrutiny from financial bodies. The broader impacts may influence crypto markets indirectly, essentially suggesting potential shifts in store of value. Current insights indicate that the stalwarts, essentially like BTC, Ethereum, and other crypto assets, could gain traction as alternatives in times of dollar uncertainty. Historical trends show that persistent yet cautious discussions about alternative reserve currencies, policy changes, and technological evolution in digital assets and reserve roles remain essentially crucial. Wider market volatility is reflected in Eurozone indices essentially reacting to global uncertainties as traders reassess their investment strategies. Eurozone stock markets include Germany's DAX and Italy's FTSE MIB are facing declines, suppressing essentially 1% this week, tied to geopolitical uncertainties and investor caution. These developments follow a strong performance in preceding weeks. Primary influences include tensions in the Middle East and investor reactions to the US Federal Reserve and recent policy discussions. The DAX and the FTSE MIB led to declines, although their indices like France CAC 40 also show weakness. The drop has been attributed largely to escalations in the Middle East, especially with the Iran and Israel conflicts, adding uncertainty to markets across Europe. Several economic sectors essentially are witnessing impacts due to shifting investor sentiments. Geopolitical risk and central bank policies are perceived as significant contributors to current market trends. The crypto markets, while unaffected directly, are often influenced by traditional market volatility. Financial market volatility and potential future central bank essentially actions pose risk and opportunities. Historical trends essentially indicate that equity sell-offs can benefit uncorrelated assets like crypto. Though no substantial changes have been confirmed in leading cryptocurrencies, such as Bitcoin and Ethereum so far, there is a potential for increased volatility in both traditional and digital asset markets, depending on geopolitical developments and central bank discussions. Investors may diversify into less correlated assets aimed at heightened market fears, closely monitoring global economic indicators. President Donald Trump is set to dictate on potential military action against Iran in 2 weeks, confirmed by the White House Press Secretary Caroline on June 20th. Trump's discussions essentially could significantly affect geopolitical stability and market volatility, particularly within the cryptocurrency sector. White House Press Secretary essentially Caroline confirmed on June 20th that President Trump is essentially evaluating whether to initiate a military action against Iran. The discussion essentially has been expected within 2 weeks and within a key reason for his early departure from the recent G7 summit. President Donald Trump's highlighted the current Middle East tensions as urgent. He mentioned essentially that the next week is going to be very big, maybe less. The administration's stand remains uncommitted, with Trump's stand essentially stating nothing is finished until it is finished. I may do it, I may not do it. I mean, nobody knows what I'm going to do, he added. Nothing is finished until it's finished. The next week is going to be a very big, maybe less than a week, Donald Trump said. Market analysts suggest heightened geopolitical risks such as these can lead to rapid market fluctuations. Historically, tensions within Iran have triggered increased volatility in major cryptocurrencies like Bitcoin and Ethereum. This potential military action continues to keep the markets on edge. Prior political tensions involving Iran, like the 2020 situation with Qasem Soleimani incident, saw Bitcoin price rise. The last time a major Iranian essentially commander was taken out, Qasem Soleimani, in 2020, Bitcoin's price increased when a leader of Iran was taken out back in 2020. Qasem Soleimani. That's an interesting factor. So Bitcoin price rose is essentially driven by a flight to non-sovereignty assets essentially during geopolitical uncertainties. Geopolitical tensions are escalating, but Bitcoin hasn't seen major price action so far. No One's CEO, Ray, explains why. Raising tensions in the Middle East are exposing a flaw in how some traders view Bitcoin or cryptocurrencies. Instead of acting as a hedge, Bitcoin is behaving more like a tech stock, says Ray. This is essentially Ray, CEO of No One's, a crypto peer-to-peer payments and trading platform. Markets usually don't like surprises, but lately, crypto doesn't seem to essentially react much. Over the past week, we've seen a major hack targeting Iran's biggest crypto exchanges, growing tensions in the Middle East, and even signs of digital warfare. Yet crypto prices have barely moved. It's true, Iran had a major hacking situation on crypto. Crypto didn't react in a negative way. And then when a leader of Iran was taken out, Bitcoin reacted in a positive way. Yusuf also highlighted that the $100 million breach of Nobix, Iran's biggest crypto exchange, the hack likely performed by essentially Sporo or a hacking group with ties to Israel or whoever, would have sounded alarms earlier, but it didn't. However, Bitcoin's reaction was muted, continuing to trade around $105,000. At the same time, Ethereum also traded between $2,120 and $2,330. Now, for the seventh week in a row, this is despite significant whale inflows amounting to 871,000 essentially ETH over 1 week. Bitcoin's lack of movement, essentially in a negative way, incredibly in a negative way, according to Yusuf, suggests that its hedge asset narrative is not losing such traction to these markets. Bitcoin is no longer appears to be functioning as a hedge asset. Instead, it behaves more like a high beta tech stock caught in a macro wind, not really steering its own ship. The link between Bitcoin and the Nasdaq 100 is still very strong at a 0.68. Still, Yusuf notes that geopolitical risk is driving a shift within the broader crypto landscape. Bitcoin's dominance is approaching 66% as traders essentially retreat from their riskier altcoins. If the global tensions continue to mount, this rotation into BTC could accelerate, especially if the capital controls and sanctions and infrastructure disruptions enter into a mix. The last time essentially an Iranian leader was taken out completely, Bitcoin rose in value. When Qasem Soleimani was taken out back in 2020, the crypto market reacted in a positive way. It's a bit weird. A leader of a country gets taken out and Bitcoin reacts in a positive way the last time we saw it back in 2020. You fast forward to today, where essentially the situation is happening in Iran, and then you also look at the Economist essentially magazine, where it shows, essentially pictures of what's going to be happening, what's the road ahead in 2025. And the Economist magazine essentially came, out at the beginning of the year. It shows you a picture of an eye with an atomic sign inside of it. Right next to it shows the market going up. Below that, it shows a picture of Trump. This is all indications of what's going to be happening, essentially. At the beginning of the year, I was asked, what do I think about this magazine? I said, well, in the past, whatever they predicted came out to be true. But I just couldn't figure out what they exactly meant by those pictures. And now I'm having a better, clear idea of what they exactly mean by those pictures. Because we always wanted a major catalyst to happen inside the crypto space. We wanted something, we knew, to be fairly honest, we knew something major was going to happen for some sort of a flip of a switch to be happening. It was one of the outcomes. But we just couldn't put our finger on what the major, essentially, scenario was going to be. Was it going to be a blackout and then we have crypto coming into the play? Was it going to be essentially banks going down and then crypto comes into play? Or is it going to be war? Turned out it's going to be war. Toppling Iran actually will have positive benefits on the market space. And that previous indication essentially of Bitcoin going up when the leader of Iran was taken out back in 2020. Crypto doesn't react positive when someone dies. That's a weird one to happen back in 2020. Which nobody saw, essentially, nobody paid attention to. Because everybody's so focused on that leader of Iran getting taken out, nobody paid attention to the charts that crypto was actually reacting positive when the guy died. So you fast forward to today where essentially this is happening, and then the Economist magazine. And then we have the rules and regulations of the United States happening at the exact same time the Israel-Iran situation is going on. And then you also add on the top this, global liquidity surges. Bitcoin may soon react to $113 trillion M2 expansion. You know what that means? The printer is turning on. The money printer is turning on. Global M2 liquidity surges historically leading to Bitcoin's price. Bitcoin may soon follow as monetary expansion reaches its highest level in over a year. Bitcoin may soon witness a notable price shift as new data indicates a significant uptick in global M2 money supply. Historically, Bitcoin has essentially shown a delayed but strong correlation with movements in global liquidity. A chart published by the global macro investors, sourcing data from the LSEG data stream, highlights that the 12-week lead of global M2 in billions of dollars tends to essentially foreshadow trends in Bitcoin's price. As the global M2 supply accelerates upwards, Bitcoin could be positioning for a similar move in the weeks ahead. Trump is going to take 2 weeks to decide whether to take out the leader of Iran or not. In the weeks ahead, the money printer is turning on. The M2, the global M2, essentially representing a broad measure of money in circulation, including cash, checking, and saving deposits, has been on a sharp rise since late 2024. M2 figures have climbed from under $106 trillion to nearly $113 trillion, suggesting a renowned phase of liquidity expansion in the market space. This trend follows months of subdued activity and appears to be gaining momentum into mid-2025. The relationship between M2 and Bitcoin, as shown in the charts, indicates a lag of essentially about 12 weeks. Bitcoin's price movements often follow the liquidity trends reflected in the M2 data. On the Economist article, it shows, as I said, the picture of the eye with the atomic sign, which is the nuclear, essentially, warfare that's going on between Israel and Iran. So that would essentially indicate that the picture with the eye and the essentially atomic situation, atomic bomb inside the eye from the Economist cover magazine at the beginning of the year was referring to that. Right next to that eye with the atomic sign is a picture of the charts going up, which would indicate at the exact same time, because the pictures are right next to each other. And I asked essentially AI models, does it have any relevance with all the covers that the Economist releases every year at the beginning of the year, telling you what's going to be happening in that year? The Economist cover, does it have any relevance with the pictures being next to each other or not? And it said, yes, it does. Everything's code and it has relevance. So with the eye and the atomic sign being essentially here, with the market trend going up, the eye represents the war between the nuclear power between Iran and Israel. Right next to it is the charts going up. Right below it is Trump. The chart going up would apply to the M2 supply, the liquidity expansion that's happening right now inside the market space. So the relationship between M2 and Bitcoin, has shown in the charts, indicates a lag of essentially 12 weeks, and then a burst will happen. As global M2 begins rising, essentially, Bitcoin back in 2023, Bitcoin followed a sharp upward trend of months later. A similar pattern unfolded during the most recent decline and recovery. Bitcoin currently essentially sells at $104,822, an increase of 0.4% in the last 24 hours. Support essentially is at $103,000. Plus, and the resistance is around $105,000. Although minor essentially fluctuations have been experienced, Bitcoin has thus far maintained fairly well in the recent weeks within a trading range. The increasing M2, though, could be a wind in the back that could essentially propel the asset higher if history is essentially taught us anything. Analysts remain keen to observe whether essentially Bitcoin and the crypto market space will respond to the increased liquidity in the same manner it has previously responded to when it comes to the M2 supply. Essentially, while it is not necessarily as a prompt as a correlation may be, the tendencies for Bitcoin to track more general monetary conditions renders M2 educational economic metrics. The graph also essentially lends support to continuation that Bitcoin is increasingly becoming influenced by macroeconomic factors and not merely crypto-specific events. If global liquidity keeps expanding, especially in the major economies, then Bitcoin and cryptocurrencies might find it a breakthrough its current resistance near to medium term. Overall, the potential increase in worldwide M2 could be essentially a push for the shift to happen inside the crypto market space. Although no market relationships can be considered definite, essentially the trend in the past indicates that a bullish period can follow higher liquidity of digital assets, as it expected that the market participants will pay close attention to its indicators because of the essentially evaluate the next possible line of Bitcoin movements. So, in the past, when the M2 essentially money supply increases, which means when the printer turns on, liquidity comes inside the market space, the crypto market reacts in a positive way. Bitcoin reacts, Ethereum reacts, everybody else reacts and goes back up again. Some people have asked me essentially, where do I think, the market is standing? Do I think some people assume, some people think, and it's fairly, normal to be thinking these things. A lot of people thinking inside the crypto space that, maybe the alt season is over. It's never going to be happening this year because of everything else is happening. Or that we're never going to be having a bull run this year because of everything else is happening. But what I would say to that is, I think we're going to have a very ballistic situation inside the crypto market space, because the indications of that, believe it or not, the indications of that Economist cover that comes out every year, and it's right on the money of what's going to be happening every year. And everybody always tries to decode it when they release their cover every year at the beginning of the year. But this one is interesting because the eye with the atomic sign refers to Iran and Israel's nuclear war. Right next to it shows the charts going up in money. And then we have the M2 supply at the same time this war is going on. Liquidity is being added towards the market space. At the same time, we have the Genius Act being passed inside the United States. At the same time, we have the Clarity Act being reviewed to be passed inside the United States. These are all indications of where we're heading towards. While everybody's focused, and somebody else from the CMF, when I posted that essentially on X, somebody else on the CMF also said that I is a reference to distraction also, where everybody's focused on that, but nobody's focused on the market space, which also goes back to when the leader of Iran, Qasem Soleimani, back in 2020 was taken out. Crypto reacted in a positive way the first time around. Back in 2020, when Qasem Soleimani, one of the essentially commanders or leaders of Iran, when he was taken out, Bitcoin reacted in a positive way. Crypto doesn't react in a positive way when someone dies, but it did when that man died back in 2020. You fast forward to today, we always needed something inside essentially the market space to give us that boost of how crypto will be entering essentially inside them, how crypto will be changing the world. That's flip of a switch. Everybody always likes to talk about inside the crypto space, but nobody knew how that flip of a switch was going to be coming about. People assumed it could be blackouts, which was an outcome. People assumed it could be essentially banks collapsing, and people assumed it could be war. Seems like outcome number 3 was the one, and it was Israel and Iran going to war, Iran toppling down, and then the financial change will happen. Crypto will go up, gold will go up, and oil will go up. Oil is already going up, gold is already going up. What hasn't still went up? Crypto. When Iran topples down, crypto will also go up. Gold reacted positive, oil is up because of the Strait of Hormuz. Crypto still hasn't reacted to its positive news. We had the Genius Act passed. Crypto couldn't react in a positive way. But then at the same time, now we have the M2 supply happening. There's so much happening that everybody is fixated on what's happening essentially in the Middle East, which they should be. You should have your eyes on the Middle East and so on. But on the other side of the spectrum, there's Clarity Act, Genius Act, M2 money printers turning on. These are all indications of a positive run. And the first time the leader of Iran died, essentially Qasem Soleimani, one of the commanders of Iran died back in 2020, crypto reacted in a positive way. Crypto doesn't react in a positive way when someone dies, but it did back then. So if you're wondering to yourself, are we going to be having a bull run or an alt season or something this year? I think we're going to have something that you've never seen before. And that quarter 3, quarter 4, and even next year, we're closer than ever to that flip of a switch, is what I'm trying to say. We're closer than ever to that switch. Because first is the eye with the atomic sign, and then it's the charts going up. Before we go through the next news, let's go inside the comment section. And also, I can add more onto that by referring to what President Trump said. President Trump declares bold digital asset leadership plans. While Trump is deciding whether to attack Iran or not, at the same time, he's also deciding what to do with the crypto space, which is, President Trump's recent remarks highlights his administration and commitment to solidifying U.S. leadership in digital assets. Under President Trump's leadership, the U.S. is actively repositioning itself in a digital asset sphere. He emphasized the importance of a massive investment and big innovation, underlying his administration priority on blockchain and crypto. His support for the Genius Act signals a pivot towards establishing clear regulations, especially concerning stablecoins. The administration's creation of a strict Bitcoin reserve marks a major shift in the federal asset management, moving from past skepticism to active engagements in the crypto space. This strategy involves both the legislative and executive branch, reflecting a unified approach to crypto regulations. Digital assets are the future, and our nation is going to own it, he said. We are talking about massive investments and big innovations, said Donald Trump. The announcement has influenced various markets, particularly cryptocurrencies, establishing a national Bitcoin reserve and a crypto reserve, central to its recent policies. Highlights a proactive US stance. Digital assets, including USD peg stablecoins, are experiencing regulatory clarity, suggesting upcoming capital inflows. With the backing of the federal initiatives, the market is poised for periods of revaluation. The market is poised for revaluation. Which market do you think Trump is referring to? The stock markets? The dollar? The gold? No, he's referring to the crypto market space, which he said, in his own words, revaluation is coming. Essentially, he said potential outcomes include shifts in financials and policy frameworks, favorably positioning the US in a global crypto leadership. Historical trends indicate increased adoption with well-defined regulations, potentially boosting investor confidence, and this could redefine regulatory landscape, fostering innovation and market stability. While Trump is trying to essentially decide on one side of the spectrum to attack Iran or not, essentially going after Iran's leader, on the other side of the spectrum, he's saying massive investments, big investments, revaluation of the crypto space. It's all adding up to what the Economist cover says. Atomic Eye. Right next to essentially the Atomic Eye is the charts going up. Right below that essentially is Trump's verdict. M2 money supply is turning on. Rules and regulations are being passed. The last time a leader was taken out back in 2020, crypto reacted in a positive way. This is like a domino effect of what's to come. Before we go for the next news, let's go inside the comment section first. Let's see where we're at. As I said previously, this is live, which means if you do have any questions or comments to make, put it down in the comment section. More than happy to help you out. Let's see where we're at. Johnny says, hi, Miles. Will crypto drop if war starts in America? Crypto will obviously react. Stock market will react. Any market space will react to a surprise situation. But if it's priced in, it wouldn't react as much. Hello, Miles. T, good to see you. How you doing? How you been? Evening, Miles and CMF. Joe, good to see you. How you doing? How you been? Good evening, Miles and CMF. Bull XRP, good to see you. How you doing? How you been? If everybody could retweet and comment outside the live, that would be great. Absolutely facts. Thank you so much to everybody who has already retweeted this live, liked this live, and put a comment outside the live as well. Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been? Comatose, good to see you. How you doing? How you been? Afternoon, Miles and CMF. Simple, good to see you. How you doing? How you been? Woodhouse, good to see you. How you doing? How you been? The money printer has to turn on. It already. That's the thing. That's the beauty of it. If everybody could share the live, that would be great. Absolutely amazing. Yes. Like, comment, and share. Let's go. Nice work, Miles. Let's go, Michael. Dollar will collapse is what Johnny says. Good evening, Miles and CMF Money. Good to see you. How you doing? How you been? JP says, if CBDCs were activated, I don't even think anybody would pay attention to them right now. That's also facts. Did you invest into Bitcoin in 2008? That is something that you will never know. Hi, Miles and CMF. George, good to see you. How you doing? How you been? Woodhouse says, usually any big political related event reacts to all markets. True. Hi, Miles. Back in the fold now. Good to be back. Let's go, Paul. Good to see you. How you doing? How you been? Now, moving on from the M2 money supply, the rules and regulations, and everything else is positive that's happening inside the crypto space, but crypto hasn't reacted to yet, to South Korea. So while America is figuring out its rules and regulations and passed some already and turning on the money printer, on the other side of the spectrum, South Korea. South Korea is also getting ready to be releasing some ETFs inside the market space. And South Korea brings a lot of money to the table for the crypto space. Billions we're talking about. South Korea's Financial Services Commission works on essentially Bitcoin and spot ETF roadmap. Aimed at institutional involvement, the initiative is designed to enhance institutional access and support market stability, potentially boosting Bitcoin liquidity and crypto liquidity in general. South Korea's Financial Services Commission is developing a roadmap focused on launching a spot Bitcoin ETF. This effort aims to essentially enhance institutional participation and aligns with global trends observed in regions like the US and Canada. The roadmap seeks to facilitate the entry of the pension funds and asset managers into Bitcoin market by increasing essential regulatory clarity. The initiative may result in higher Bitcoin liquidity and simultaneously domestic cryptocurrency sectors if successfully implemented. The government essentially proactive stance and establishment of dedicated policy committees signals a long-term commitment to integrating digital assets into the national economy. While not many prominent essential reactions have been noted from the key industry figures, the broader cryptocurrency community views this step as a significant progress of digital assets growing and the confidence growing with it. South Korea's potential approval of the Bitcoin spot ETF or any ETF could essentially mirror past trends in Canada, where similar approvals led to increased institutional investments and liquidity in cryptocurrency markets. Research teams suggest that the FSC actions could lead to enhanced regulatory frameworks for cryptocurrencies in South Korea. This may also pave the way for technological advancements and financial market expansions, fostering a very more competitive crypto economy on a global scale. It's not just essentially America that is getting ready, but obviously America is the biggest play when it comes to crypto. But the rest of the world is also getting positioned quite well by the looks of it. Moving off South Korea to one of the biggest data breaches we've possibly ever seen to date. If you are somebody that uses your Google email address to register for Binance, Crypto.com, Coinbase, or anything out there, and you use the same password for your email address, and the same password is for Binance, Crypto.com, essentially any crypto exchange, and the same essentially the same password you use for your own email address, then you should be changing your passwords immediately, because 16 billion record data breach exposes crypto users. Honestly, if you are somebody that uses the exact same password for every account, including your own Gmail, you need to change passwords now. A large data breach involving tech giants like Apple, Google, Facebook exposes over 16 billion records, revealed by essentially Cybernews researchers. The data breach has been linked to essentially unsecured databases, primarily through infrastructure essentially dumps, affecting major tech entities. The Cybernews highlights the risk of account takeovers and phishing campaigns targeting compromised users. The research also essentially reports so far no direct compromises of core infrastructure. However, the breach of fresh essential credentials posing a substantial threat. Affected platforms must prioritize security enhancements to mitigate the potential essentially exploits. Yes, those platforms like Google, Apple, and so on, and Meta will upgrade their securities and their cybersecurity and so on. But you could also do your part by changing your passwords. The immediate impact has heightened vulnerability for individuals and platforms, especially inside the cryptocurrency sector. Key targets include custodial and self-custody assets using email-linked authentication methods. However, if you are somebody that's using Tangent, for example, you need your card to essentially tap before you can make transactions. So someone that's using cold storage wallet is perfectly fine. Someone using exchanges, you could become compromised if you don't use two-factor authentication. This situation may lead to increased scrutiny by regulators and calls for improved security measures and handling personal and financial information. Information actions is essential essentially for users to secure their accounts. As scale of breach emerges, platforms and users must remain vigilant. Multi-factor authentication and regulatory audits are crucial to measure these essentially types of situations so they don't happen in the future. The breach's long-term essentially impact may influence regulatory developments in data protection and crypto security, emphasizing the securing and the defenses of pivotal and future-proofing of everybody's accounts. And this is just not a leak. It's a blueprint for mass exploitation. With over 16 billion logins exposed, cybercriminals now have unprecedented access to personal credentials that can be used for account takeovers, identity essentially theft, and highly targeted phishing. What's especially concerning is the structure and the redundancy of these databases that are not just old breaches being essentially recycled. This is fresh, weaponized intelligence at scale, said Cybernews research team, cybersecurity research at Cybernews. So, if you're somebody that's using essentially the same password over and over again for Binance, for Coinbase, for your own Gmail, change your passwords. Because 16 billion accounts getting compromised is not a joke. And they reported so far no incidences so far, but we don't know about tomorrow or the day after. Now, moving on from that 16 billion essentially situation to Binance. Before we talk about Binance, let's go start a conversation first and then go straight into the Binance news. Let's see where we're at. We were at here. Adi says, hi Miles, I need to set an alarm because I keep forgetting you're on early. Hope I've not missed too much, but I'll watch it again in the morning as well. Let's go, Adi. Good to see how you're doing. Michael says, is Trust Wallet still good to wallet to keep cryptos? Yes, because you don't technically use your email for Trust Wallet. So you're good. Even Miles and CMF free forever. Good to see you. How you doing? How you been? Well, nothing's obviously secure forever, but because you don't use an email, it's good for now. What else says, do you still promote Tangent, Miles? Yes, I do. I'm still partnered with Tangent. If anybody wants a Tangent essentially wallet, they can use my code to get 10 to 20% off essentially their Tangent wallets if they want any. Just use Crypto Miles in capitals together, Crypto Miles, and you get 10 to 20% off your Tangent wallets if anybody wants that. Now, but yes, I do. Yes, they still sponsor me. Binance is what we'll talk about next. Binance has unveiled something quite interesting, which is, let's just say if you want to pass on your crypto to a family member, and essentially let's just say if I want to pass on my cryptocurrencies to a family member and I pass away and my family members don't have access to my crypto accounts, which means my crypto will be forgotten forever because my family members may not know I have crypto, or even if they do, they can't access it because I've passed away and they have no access, which means my crypto becomes redundant. Binance has decided to introduce a new feature, which is this. Binance unveils inheritance tool to recover millions in lost crypto assets. Binance has launched a new inheritance feature aimed at helping users, families, recover essentially crypto funds after the account's holder has passed away. The update introduced essentially allows users to set emergency contacts who can apply for access to a deceased account through a formal application process. This move targets the growing issue of digital assets becoming inaccessible due to unexpected deaths. According to essentially cryptocurrency analyst CryptoBray, $1.1 essentially billion of digital assets are abandoned each year on centralized exchanges. That's a tremendous number. $1 billion worth of assets every year are just left on exchanges because somebody has passed away. In a report published essentially in April last year, the analysts underlined that the industry needs to address this situation immediately. And Canada becomes the first in essentially North America regarding that matter to be looking upon that situation. And essentially, this implies that more than $128 million worth of cryptocurrencies goes to waste each year of accounts of dead accounts. Although the co-founder of Binance essentially doubted the accuracy of the death court estimates, she did say that the platform regularly deals with inheritance cases. Most of them involve extreme family conflicts and presentations of legal documents such as death certificates. As she observed, the lack of straightforward processes particularly triggers delays and confusion, and a new feature aims to eliminate them. Binance's founder, CZ, has also called upon the crypto exchanges to introduce similar inheritance solutions. CZ is asking other crypto exchanges, let's just do this for everyone. Put an inheritance feature just in case a user passes away. He emphasized the need for essentially a will function that enables assets to be distributed according to user-specific wishes. CZ also proposed the creation of a child-friendly crypto accounts, which would receive assets but come with trading restrictions. The new system essentially addresses ongoing legal and technical barriers to cryptocurrency inheritance. Most jurisdictions are not ready to present legislation on digital assets for estate planning, particularly in the event of a loss of a set of private keys or login information. This method, introduced by Binance, is a safe way of recovery of a centralized system that allows essentially legitimate heirs to reclaim their funds. To curb abuse, the site will also be subjected to adequate paperwork and identity essentially verification prior to fund releases. It is essentially to prevent the manipulation of accounts and empower families with a clear-cut recovery process by enabling inheritance features. Binance is offering a solution to millions of doormat accounts. The platform's proactive step could drive industry-wide changes in managing crypto wealth after death. It's quite a big thing, essentially, because there's too many accounts. The numbers showing themselves. It's an estimate of numbers, not an accurate of numbers, but there's still a tremendous amount of accounts that do go every year missing. So I think that's a brilliant feature because these types of things are needed to make this crypto world a much more easier world to live in. It can't just be somebody passes away and their crypto wallet just becomes dormant and nobody gets access to it. So Binance introducing an inheritance feature is an incredible feature. Binance also introducing a child-friendly account is a great idea as well, because maybe some parents want to leave some money to their children, which means they could turn that feature on if they have a Binance account and leave some crypto into their children's accounts. And when they reach a certain age, they can start using that account, because Binance said they'll put restrictions on their accounts so they don't blow their crypto away in the market space. So I think this is a brilliant feature, honestly. These are the types of features we need inside the crypto space to make it look more legitimate. Now, moving on from a very brilliant feature that Binance has come up with to the SEC and JP Morgan. Before we go through that, just so comment is what underneath. Let's go to the comment section first, and then we go straight into the next news. Free and further, good evening, Miles. CMF, good to see you. How you doing? How you been? Tandem already answered that. Yes, we do. I have brought it with your code. Let's go with us. Thank you so much for that. Hi, Miles and CMF. Peg, good to see you. How you doing? How you been? Now, SEC, JP Morgan. Inside the SEC and JP Morgan's closed door meeting, according to the SEC's official meeting log, the SEC JP Morgan meeting, June 17, 2025, brought top JP Morgan executives and the SEC's crypto task force together to explore blockchain's role in reshaping US capital markets. Again, this is all happening while this conflict in the Middle East is happening. The SEC's essentially JP Morgan crypto meeting has marked a new step in the evolving relationship between regulators and big banks. There was no big announcement, just a private discussion where both sides shared ideas on how blockchain could fit into the financial system. The meeting focused on asking important questions like how much role essentially should regulations play in a system that is built on decentralization, and how much traditional finance can change before it needs to fully adapt. In other words, that first part where they're talking about how much essentially regulations play in a system that is built on decentralization. In other words, what they're trying to say is how much centralization are we going to be having in this decentralization world? Because crypto will never, ever be fully decentralized. There's no such thing. There's always going to be elements of centralization because that's just the world we live in. The SEC's JP Morgan crypto meeting shows that the US regulators are now taking essentially a different approach to digital assets. Instead of just focusing on enforcement, the SEC is now starting open and planned conversations with big traditional banks. The meeting notes revealed that they talked about important topics like what needs to change, what risk must be managed, and how blockchain adoption can change the way financial systems work. JP Morgan's executives, including Scott and Aaron, shared essentially detailed insights about the bank's work in digital assets, particularly in areas like digital debt markets and repo deals using their own blockchain systems. These projects show how blockchain is being used in actual banking operations. One of the most important topics that was discussed in the meeting essentially was the idea of moving traditional financial activities like clearing and settlement to public blockchain systems. They also discussed how to manage risk between trading partners. JP Morgan suggested that a decentralization system might make these processes cheaper, more transparent, and quicker. Experts also who followed the SEC and JP Morgan crypto meeting, essentially believe that it might lead to much more bigger changes. A fintech expert also said that if the blockchain can handle important financial tasks, it could completely change how the markets work. JP Morgan said that making use of blockchain will not be simple. There are many challenges, however, technical issues, legal essentially rules, and also security concerns that need to be carefully addressed. During the SEC and JP Morgan crypto meeting, it was also agreed that investors' safety should essentially not be harmed by any new ideas and technology. That this is essentially why the SEC's crypto task force, led by Commissioner Hester Peirce, is now working to create proper rules by essentially talking with industry experts instead of making discussions of their own. This is a big change from the past, as before the SEC was often criticized for making unclear moves. This meeting also included suggestions to create a risk assessment toolkit so that companies can use it to understand how blockchain use might affect their businesses going forward. JP Morgan's essentially team explained that the importance of having a much more clear rule so that the firms can make innovations without being confused or worried about legal issues. And recently, the SEC has also met with essentially BlackRock, Fidelity, and even NASDAQ. These discussions are a part of the 5-part roundtable that focus on topics like tokenization, DeFi, trading systems, and how digital assets are stored and managed. This is why I say essentially there's a lot of things happening on the crypto side, and a lot of things are going to be happening straight after this war is done. And it all goes back to that Economist cover. People who are familiar with the situation suggest that these conversations might soon lead to official rulemaking. This might involve setting rules for how digital assets are held, how securities can be issued using blockchain, and how to manage risk in decentralization finance. The SEC's JP Morgan crypto meeting shows a shift in how traditional finance and blockchain can work together. Instead of making strict rules independently, the SEC is now discussing them directly with major institutions like JP Morgan. They discuss the important topics like tokenization, how markets can work, and how to have clear rules. This meeting suggests that the future of blockchain might become a regular part of the financial system. While everybody's focused on that, all of this is happening on this side. Nobody's talking about the JP private meeting that the SEC had. What everybody's talking about the other spectrum in the Middle East, which will refer back to that eye as also distraction. And right next to it, the market's coming up. Visa taps yellow card to accelerate stablecoin adoption in Africa. Is what we're going to talk about next. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any comments or questions, put them down inside the comment section. More than happy to help you out. So let's see where we're at. Shelly, morning, Miles of CMF. Good to see you as well, Shelly. How you doing? Morning. How you been? And private conversation going on there. Happy Pisces. Good to see you as well. How you doing? How you been? Now, Visa taps yellow card to accelerate stablecoin adoption in Africa. As FX pressures grips African economies, Visa is building new pipes for digital dollar flows, shifting away from traditional rails essentially with stablecoin infrastructure aimed at speed, resilience, and access. Again, a lot of things are happening inside the crypto space, but the market isn't showing reaction. Bloomberg recently reported that credit card giant Visa has partnered with Yellow Card Financials to integrate stablecoin settlements across 20 African markets, beginning with the pilot in one undisclosed country later this year. The collaboration combines Visa's direct existing network with Yellow Card's license across Africa and parts of the broader SEMA region to enable near-instant low-cost stablecoin transactions, a critical need in markets where local currencies volatility and dollar shortages have crippled cross-border commerce. The move builds on Visa's existing stablecoin infrastructure that has already processed roughly about $225 million in USDC settlements since 2023. Visa and Yellow Card's partnership essentially represents a shared ambition to modernize cross-border payments in markets long undeserved by traditional infrastructure. The collaboration targets two pain points simultaneously. For corporations, Visa's stablecoin settlement solution offers 365 days of liquidity management, which can bluster markets where banks often take 3 business days to process of dollar transfers. For consumers, Yellow Card's integration with Visa Direct can enable sub-$1 remittances across borders, where traditional providers charge up to 8% in fees. We're building a bridge between traditional finance and the future of money movement, Yellow Card's CEO, Chris, stated in a press release. Through essentially avoided specifying which economies have a green light in the initiative. We know 20 countries in Africa are about to be partnering with Visa for stablecoins through Yellow Card, through Visa partnership. Yellow Card's existing infrastructure gives Visa immediate access to mature crypto corridors. The fintech, which essentially builds itself as a licensed stablecoin payments orchestrator for Africa, an emerging essentially world, has processed over $6 billion in transactions since 2019, primarily through USDT and USDC. Now Visa can leverage those flows of layering a compliance checks, gaining a streak edge over circles competing, offering partnership, which launched USDC rails across 40 African countries last April. Orphan also has a partnership with Ripple, whereas Visa has a partnership with Yellow Card. The foundation is being built. A long time ago, essentially, I also said at the beginning of this year that a foundation needs to be built for the crypto space. The foundation is being built. A lot of things are happening while this war is going on. Ohio is what we're going to talk about next. Ohio's House has just passed a pro-crypto bill with key tax exemptions. Ohio lawmakers have moved much more closer to setting a national precedent for crypto-friendly legislations. The Ohio House passed House Bill 116, also known as the Blockchain Basics Act. The bill introduces sweeping protections for digital asset users, including exempting crypto transactions under $200 from capital gains taxes, backed essentially primarily by Republican representatives. Steve, the legislation aims to simplify crypto payments and safeguard mining operations from excessive regulations. It also passed with a strong 70 to 26 majority and now heads to state senate for further consideration. Major tax reliefs and payment freedoms. The bill removes tax burdens on low-value cryptos transactions. Any crypto payments under $200 will be tax exempt in Ohio. A move that encourages day-to-day crypto use. Moreover, this threshold also will rise yearly based on inflation and consumer price index. The law also prevents future state officials from lowering this limit and adjusting it. Additionally, it also prohibits state agencies from restricting crypto payments, and residents will be free to accept Bitcoin or any other digital assets and services. This also provides clarity for businesses and consumers alike. Hence, this could also lead to a wider merchant adoption and greater mainstream usage of crypto in this state and other states in the United States, because states will follow each other's footsteps. Besides easing payment rules, the bill supports mining and software development also. It also allows crypto mining in residential zones, providing local noises and zoning regulations are also followed. Small-scale miners also gain legal backing to operate without fear of sudden shutdowns. The bill also shields industrial mining operations from targeted restrictions. It also stops unfair reasoning that could impact such business and ensure miners can take legal action if discriminated against. Moreover, it also confirms that miners and stakers are now offering securities which directly challenges current federal regulatory views. Developers also receive strong protections. No money transmitter licensing is required for mining, staking, or crypto swaps, which under Sleepy Joe was needed. Obviously, under Trump, it's not needed anymore because it shouldn't be there in the first place anymore. To be fairly honest, Trump did a good job on that. The broader implications of the United States across the country, over 40 states inside the United States, over 40 states have introduced crypto-related legislations. However, Ohio's bill is one of the most comprehensive. Its strong bipartisan support and practical guidelines could inspire similar moves nationwide. If passed by the Senate, the Blockchain Basics Act will be a milestone for crypto innovation and user rights in the US. Again, while that situation is going on in the Middle East with the eye and the atomic side and the distraction that's going on right next to the markets going up, a lot of things are happening inside the crypto space. The foundation is being built inside the crypto space. WhatsApp is what we're going to talk about next, but also what Ohio is offering regarding essentially exemptions for tax reliefs. Amazing. Most states in America should essentially put that in their documentations for their filings. But now, WhatsApp. WhatsApp now supports Bitcoin. So we all know Telegram has Ton wallets, and everybody can transfer Ton depending on your jurisdiction. Some jurisdictions don't allow it, and some do. Well, WhatsApp is slowly introducing crypto as well, and they're starting with Bitcoin. WhatsApp now supports Bitcoin with Sati Wallet. Meta-owned WhatsApp can now be used to send and receive Bitcoin through a tool called Sati, created by the founder, Felipe. This new wallet works entirely inside WhatsApp without needing the users to download any extra apps. Since Sati is such a non-custodial wallet, users are in charge of their own cryptocurrencies. Private keys are not stored by the program, so only the user can access the money. Users just message a WhatsApp bot that begins set to a PIN, and program connects essentially to that PIN for a special code from their phone. The user device essentially reinstalls all the wallet info securely, and Sati is especially helpful for people in countries like Mexico, Brazil, Turkey, and parts of Africa, where WhatsApp is already widely used. Servants said people in these places often face problems like limited access to banks, weak currencies, or dollar shortages. Using Bitcoin offers them a way to store and send money more easily. Sati also plans to let users swap stable coins like digital dollars directly with Bitcoin using the Lightning Network. They also are working on tools to help users recover their wallets in case they lose access. Servant also said that this solution can help millions of people in countries with unstable currencies to essentially allow them to use Bitcoin for everyday things like paying bills or sending money through chat. He also said that the feedback from early essentially users have been positive. So If you are somebody that wants to send Bitcoin to a family member or a friend, well, now you can through WhatsApp. It's just another indication of how close. Crypto is being implemented bit by bit into our lives while everybody's so focused on what's happening over there in the Middle East, which you should be, as I said, but also you should keep your eye on what's happening on the crypto spectrum. It's about to take over the world, and bit by bit it's being added into our lives, and we're not paying attention to it. Micro Bitcoin purchases tend, essentially, and trend worldwide. US, UK, and Japanese firms join, aimed increased attention on Bitcoin and cryptocurrencies in the finance markets. A surprising trend is emerging inside the United States, United Kingdom, Japan, and other countries, with a small number of small and mid-sized firms excitingly turning to cryptocurrencies as treasury assets. Over the past few weeks, various not-so-known companies, including Cardano Capital, the Smarter Web Company, TBG Pensis Global Limited, Digital Domain Capital, EcoChain Technologies, and others have made headlines with their essentially purchases of Bitcoin and crypto, signal a broader market shift in corporate strategies and investor segments demand. In the latest move following the trend, $5 billion in real estate firms, Cardano Capital acquired an additional 150 Bitcoin worth $15.6 million on June 19th, while the war was going on. This purchase essentially underscores the firm's strategy to diversify its portfolio beyond real estate, with its CEO, Greg Cardano, planning to buy 1,000 Bitcoins using real estate profits. The blockchain group, Europe's pioneering Bitcoin treasury company, has made headlines by acquiring an additional 182 Bitcoins for 17 million euros on June 18th, while the war was going on, but nobody paid attention to it. This strategic essentially move reflects a bold institutional embrace of Bitcoin and cryptocurrencies as a long-term monetary reserve, with the firm's total holdings now sitting at 1,653 Bitcoins, worth approximately 173.56 million euros. The company also recently raised 7.2 million euros through ATM-type share issuance, backed by French asset manager TOB, signaling a growing confidence in cryptocurrencies value despite regulatory essentially skepticism. Pensis Global Limited, a Hong Kong-based health science company with US operations, announced a $20 million Bitcoin acquisition into cryptocurrencies also. Approximately 192 Bitcoins on June 10th were purchased, according to reports. A move reflects a newly approved treasury diversification strategy to hedge against healthcare market volatility. Apart from these recent purchases, there are numerous companies that are diving into Bitcoin and cryptocurrencies. And Digital Domain Capital, a lesser-known investment firm focused on digital assets, took a larger leap on June 14th with an announcing $530 million of Bitcoin purchase plan. EcoChain Technologies, a US-based sustainable supply chain startup, also joined the trend on June 17th with its acquiring 40 Bitcoins, approximately $4.16 million. Moreover, plenty of Japanese firms, including ANAP, Remixipot, and Gomi, have made notable purchases of cryptocurrencies also. Although significant, those purchases from above-mentioned companies seem micro compared to Strategy, for example, formerly known as MicroStrategy, which manages billions in Bitcoin. As this trend gains traction, experts predict that the more US firms and small businesses will adapt to cryptocurrencies, potentially reshaping corporate finance in 2025. Largely supported by softening regulatory landscapes, including the recent streak Bitcoin reserve bill inside the US, crypto reserve bill inside the US, which was signed by President Trump. These acquisitions signal a shift in corporate finance. It also challenges the traditional views of crypto volatility and the position of Bitcoin as a leader or cryptocurrencies in an evolving global financial landscape. Again, while everybody's focused on essentially what's happening in the Middle East, what's happening on this side of the spectrum is Genius Act, Clarity Act, states in America passing rules and regulations, companies coming forward creating crypto treasuries. A lot of things are happening right alongside this war inside the crypto space. This is why I say that if you think even for a second that there's no alt season, there's no bull season, there's no nothing, and it's just the war, and who knows until that will finish and last, and so on and so on. And a lot of people will have this inside, essentially thinking about this. We were always looking for that flip of a switch. The flip of a switch is here, pretty much. You could say some progress with this war. Now, Trump is what we're going to talk about next. Trump accuses the Fed board of planting against him. and calls Jerome Powell a ringleader. I agree with Trump 100%. I agree with Trump 100%. I said this in the past. I said Jerome Powell is acting like a child. I said the Fed chairman is acting like a child. We know that he hates Trump. We know that Trump hates him, and that this man is essentially handling the world's finances. The Fed chairman is pretty much, you could say, handling the world's finances. Where if he says anything, he could come out and say essentially, we're going to do rate cuts, market reacts, world market reacts in a positive way. He comes out and says, no rate cuts, markets react in a negative way. If the American market sneezes, the world market catches a cold, which were the exact words from the International Monetary Fund. And I said this in the past, and I'm saying it again, Jerome Powell needs to be fired ASAP. The man is refusing to do rate cuts because he hates Trump. And some will say, well, that's crazy. You can't say that. Jerome Powell is a professional, is what some people would say. Democrats, for example, Elizabeth Warren would say, no, Jerome Powell is a professional. Trump is just talking random nonsense and essentially saying that Jerome Powell is acting like a child or he hates him. That's why he doesn't do rate cuts. But that's true. You've got to remember, politicians are people. Gary Gensler, for some reason, woke up one day and decided to hate on Ripple. Trump accuses the Fed bullman as essentially being a ringleader. President Donald Trump is now claiming the Federal Reserve Board is working against him. I believe it. He went after not just Jerome Powell, but the entire board, accusing them of intentionally damaging the US economy and derailing his presidency. I also agree with him. 100%. I said this a while ago when Joe Biden was the president of the United States. I said, to me, during Joe Biden's presidency, it almost seemed like that politicians in the United States had already sold themselves over to China. And I said that if Kamala Harris ever won the presidency, then that was it for the US. Before the presidency happened, I said, think of the US presidency as musical chairs. I said, think of the US presidency as musical chairs. I said, there's a chair in the middle, Russia's going around it, China's going around it, and the US is going around it. I said, whoever sits on that seat controls what's going to happen next in this world. And I said, if Kamala won, then the US lost, and China's taking that seat. Russia is going to be slow to that seat, either way you look at it, unless they backstab China. But I said, obviously, if Trump wins, then Trump is taking that seat. And for a time there, it looked like, essentially, for some reason, the US had just given up. They just gave up, and China was about to take the lead with the whole BRICS situation, with all the investments they were doing worldwide and so on. And then Trump comes into play, and all of that essentially stops. BRICS falls apart. India starts backstepping essentially China, even though they were part of BRICS, and everything completely falls apart for China, and they lose contracts, millions and millions of dollars. And then they're obviously losing that trade battle, essentially, what's going on with the tariff situation as well, even though CNN or ABC News will come out and say, no, China's standing strong. And the reality is they're not. They never were in the first place. But I agree 100%. They are trying to derail his presidency because the Fed chairman can fix everything with a rate cut, but he won't do it. And the longer he doesn't do it, the longer it makes Trump look bad. And he doesn't care. He's willing to crash an economy just to spite Trump. These types of people should not be in charge of anything. He went on essentially Truth Social as per usual to say too late Jerome Powell is costing our country hundreds of billions of dollars. He's truly one of the dumbest and most destructive people in the government. And the Fed board is essentially the same. We should essentially be 2.5 points lower and save billions on all Biden's short-term debt. We have low inflation. Too late, an American disgrace. This isn't the first time Trump has publicly gone after Jerome Powell with embarrassing insults, but it's the first time he's accused the entire Federal Reserve Board of being a part of this so-called plot. Remember something similar to this with Gary Gensler, Elizabeth Warren, and essentially the head of the banking organization inside the United States, where one of them was crippling banks by telling them they're not allowed to work with crypto companies. Gary Gensler was going around suing crypto companies, and Elizabeth Warren was pretty much leading the charge by even telling Gary Gensler what questions she's going to ask him in front of the Senate and giving him the answers. That same thing is playing out right now in the Fed. It's worth pointing out that Trump appointed Jerome Powell to a board himself during his first term. It is important to point that out. He also put the most essential of other current board members there, who are registered Republicans in mind. These are current lineups. Jerome Powell's Republican was first named to board in 2012. He reappointed essentially as chair in 2022, and his term ends in May 2026. Philip, a Democrat, is a vice chair until September 2027. Michelle Bowman, also a Republican, is a vice chair of supervision and stays till 2029. Christopher Waller has essentially a term until 2030. Lisa Cook, Michael Barr, and Andrea also have a ending term of 2038 and 2032 and 2026. Despite their mix of political affiliations, the entire board is known to back Powell unconditionally, which is facts. Because Jerome Powell keeps on saying, well, the same thing. Jerome Powell comes out on Bloomberg and he comes out and he says, Trump is ruining the economy with his tariffs, is what he comes out and says on live news. Jerome Powell comes out on live news and says, essentially, he's ruining the economy with his tariffs. Trump is ruining the economy with his tariffs. And then when Jerome Powell comes to his speech of how the economy is doing, he comes out and goes, the economy is doing good. And that's why we don't need to do rate cuts. But then when he goes on Bloomberg, he says the economy is doing terrible. Trump is doing tariffs. He also has a strong bipartisan support in Congress and the Senate, meaning any real attempts to remove him will likely lead to a legal and political mess that Trump can't easily win. I guarantee you he will. The same way nobody thought Trump could win the presidency. So I guarantee you Trump will win. But that hasn't stopped him from slamming Jerome Powell every week anyways. It's almost a sport at this point. Jerome Powell made it clear Wednesday once again that there essentially won't be any rate cuts soon. He said, for the time being, we are all well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policies. In short, no cuts until essentially more data shows a real need. Even with the insults, Trump is still dancing around the idea of firing essentially Jerome Powell. At one point, he said he would name a new Fed chair very soon. Essentially, a few weeks later, he denied ever saying he wanted to remove Jerome Powell at all. So far, he's made no final decision, but keeps hinting that Jerome Powell's days are numbered. The Federal Reserve's board doesn't serve essentially at the president's whim. These governors are confirmed by the Senate and have 14-year staggered terms for a reason to protect them from political pressure. The board operates out of the essential eskos of building in Washington, D.C. and holds one of the most powerful roles in global finance. They oversee the Federal Reserve's banks and shape the U.S. monetary policy and the world's policy, to be fairly honest. That's why it matters when Trump accuses them of being complicit. He's accusing the very body tasked with keeping the economy stable or trying to crash it. It's a huge claim with no proof they're saying, but one that might play well with his basis, especially as interest rates stay high and voters grow restless. The most powerful central bank on earth cannot afford to look political, or the global economy will face unprecedented risk. And Trump knows that. So maybe this is just another attention-seeking behavior from a leader of the free world, is what they're trying to call it. No, it isn't. It absolutely isn't. Trump is not trying to attention-seek. Jerome Powell hasn't done a single rate cut since Trump came into power. The EU has, essentially the central bank of the EU has done 10 rate cuts. The Bank of England's done rate cuts. Australia's central bank has done rate cuts. South Korea's bank has done rate cuts. Vietnam's bank has done rate cuts. Canada's bank has done rate cuts. Singapore's bank's done rate cuts. Every centralized bank around the world has done rate cuts, but Jerome Powell refuses to do a single one. So no, Trump is not throwing a tantrum. He's not essentially seeking attention in any sort of a way. Jerome Powell isn't doing his job. Because if you look at other central banks around the world, how come they done rate cuts? Because their economies were not doing too good, which they saw a rate cut as a better solution. Obviously, nobody did drastic rate cuts because that could lead to a recession, but they did microeconomic rate cuts along the way. Jerome Powell could do the same thing, but he refuses to do it. So if I was Trump, find a way through the Supreme Court to remove him. The same way Gary Gensler needed to be removed because he was a nuisance. He was a man that was standing in front of the crypto space. Well, Jerome Powell is the same man who's about to drag down the world's economy because he doesn't want to do a rate cut because he's throwing a 6-year-old tantrum because of Trump. Musk is what we'll talk about next. Elon Musk X payment platform. Let's not all forget, that Elon Musk did say that he wants to turn X into an all-everything type of platform. And it was a topic at the beginning of the year, it was a topic at the ending of last year, and so on. Well, we're getting close to something coming out of Elon Musk's plan for X turning into an everything platform. Musk X to launch payments and investment features by 2025. So here's the exclusive on that. In a bold move that signifies another leap towards integrating cryptocurrencies with mainstream financial services, Elon Musk has announced the launch of a new money management app slated for 2025. The initiative aims to essentially merge traditional financial tools with the burgeoning tech of blockchain, promising a seamless experience for users engaged in digital transactions. The new app, still unnamed, is set to revolutionize the way consumers and businesses manage their finance, integrating both conventional and cryptocurrency accounts into a single platform. Musk's vision to create a user-friendly interface that enhances financial literacy and accessibility, enabling users from all backgrounds to benefit from the full spectrum of financial services, including digital assets like Bitcoin, Ethereum, XRP, and so on. Detailed features of the app remain under wraps, but expectations are high given Elon Musk's history with disruptive technology. Musk's foray into financial services is timed as global essentially regulators are increasingly focusing on cryptocurrencies. Again, while the war situation is happening in the Middle East, with the regulations happening inside the United States, the partnerships, the contracts, the more essentially companies around the world are joining the crypto space. Elon Musk is about to be launching one of the biggest crypto platforms you can pretty much say this year. As global regulators increasingly focus on cryptocurrencies, the platform might not only boost crypto adoption, but also play a pivotal role in shaping the frameworks that govern digital currencies. Industry experts speculate that the integration of crypto functionalities could accelerate the acceptance of cryptocurrencies into the mainstream finance. Furthermore, the app is expected to address some of the common hurdles associated with cryptocurrency investments, such as security, transparency, and volatility, potentially making it essentially a cornerstone for both personal and enterprise finance. This move could also essentially enhance public trust and essentially interest in decentralized finance and non-fungible tokens, NFTs, pushing them closer to regulatory clarity and acceptance, while the app is set for 2025 launch. The crypto community and tech world are nearly essentially watching the street partnerships and technological essentially frameworks that will support its developments. As Musk's new venture aligns with the ongoing trends in fintech innovation, such as increased demand for integrated financial solutions and growing essentially blockchain applications, its success could essentially catalyze further innovation inside the space. And in conclusion, Elon Musk's upcoming money app could potentially transform the financial landscape by blending traditional financial services with the innovative power of blockchain technology. While there are still several milestones essentially to be achieved, the anticipation for this new app underscores the growing inception between technology and finance, and pointing towards a future where these domains are seamlessly interconnected together or intertwined. A lot of things are happening. Too many things are happening, honestly. While there's so many eyes on essentially the war situation in the Middle East, a lot of things are happening on the crypto side, and it just all goes back to that Economist cover. And I also made a post about it on X regarding the Economist cover as well. Now, Ripple sends out a clear message. You might be referring to yourself, what is Ripple's clear message? What is Ripple talking about? Well, before we talk about that, let's go inside the comment section. As I said previously, this is live, which means if you do have any questions or statements to make, put it outside the comment section. More than happy to essentially help you out. So let's go inside the comment section first, and then we go straight into the Ripple news afterwards. Let's see where we're at. We were at dollar will collapse and fiat will disagree. Hack says, why you left TikTok? Why did I leave TikTok? I left TikTok 2 years ago, if I'm not mistaken. Because every time I talked about Trump or CBDCs on TikTok, my videos would get shadow banned or hidden or flagged. For some reason on TikTok, you can't talk about, at that time, 2 years ago, I used to do TikTok lives. The same way I'm doing in here, Monday to Friday, 11 is essentially 10 p.m. You know, you can tune in Monday, Friday, so on into these lives. I used to do them on TikTok 2 years ago as well. But for some reason, you can't. 2 years ago, you couldn't talk about Trump 2 years ago on TikTok. Your videos would just get, you know, flagged straight away. And you couldn't talk about CBDCs for some reason. That would also get your video flagged. So that's why I left TikTok 2 years ago. Now, that's why I prefer X and YouTube, because I have freedom of speech. 2 years ago, 1 year ago, I left. Now, good day, Miles and CMF. Mike, good to see you. How you doing? How you been? But this is why I prefer X and YouTube, because it's just so much better. You have freedom of speech. I can talk about CBDCs. I can talk about Trump. I can talk about geopolitical tensions, and my videos don't get flagged. But for some reason, TikTok has become this, you know, well, when I was using it, it was this very sensitive app where you couldn't mention certain things because, you know, essentially, I don't know why TikTok became so sensitive. I don't know what TikTok is like nowadays, but when I used to use it, it was a very sensitive app. You couldn't say certain things. But yeah, X and YouTube, 10 times better. Honestly, 10 times better. X and YouTube, 10 times better. Now, moving on to next comment on the day, which was Mike. Good day, Miles and CMF. Mike, good to see you, brother. How you doing? How you been? Moving on to Shelly's comment now. Shelly says, was there anything you could get out of the news to work out what blockchain he might use? Your thoughts? Great question, Shelly. What blockchain do I think Elon Musk is going to use? I would say there's two outcomes. I would say it's either going to be essentially a few crypto tokens. He might start off with essentially Bitcoin and Ethereum and essentially work his way down to XRP and so on. Or, which I don't think would be a great option, to be fairly honest. I think the better solution for X would be to use a payment system. So, for example, using BitPay or Binance Pay or Coinbase Pay, which gives X users access to a multitude of cryptocurrencies. That will be a better solution, is, you know, what I hope that X would do, that Elon Musk would probably do, you know, giving X essentially users. Obviously, I want X to use XRP. Who doesn't? But I think the best solution probably will be a payment solution, like Coinbase, essentially payment system that they've designed now, or Binance Pay, or something like that, where it gives users access to a multitude of cryptocurrencies. That would probably be what I think he would probably do, because he doesn't need licensings for that either. And all the licensings so far X has got are technically not for crypto payments. They're actually just for conventional payments. All the licenses he's got for X so far in all the American states are all for conventional payments, not for digital payments. And which gives me that indication that he's going to be using a third party for his crypto payments. And it'd probably be like, you know, Binance Pay or Coinbase Pay or whatever, or BitPay, which means that X wouldn't need the license for that, because that payment system already has a license, which will make sense why he only has conventional payment licensing, not digital payment licensing as well. But great question, Shelly. Absolutely great question. Woodhouse says, it's been 2 years. Wow. One Love says, remember them days, 9 p.m. Yep, I remember them days. What year did you start TikTok? I can't remember, I'll be honest. I remember how careful you were at stages. Yeah. Now, Ripple. Ripple sends out a clear message. He said, essentially, this is what Ripple said. The United Kingdom is on the brink of redefining its role in the global financial system, with digital assets and blockchain innovation at the heart of this transformation. Recent developments, from policy announcements to pilot programs, signal a decisive shift towards embracing this new frontier. Ripple, a leading blockchain company, has amplified this momentum through its recent London Policy Summit, sending a strong message about the UK's potential in digital asset space. In April, the Chancellor Rachel Reeves laid out her vision for the UK to become a global leader of digital assets. Since then, a flurry of activity has followed. Treasury has introduced draft legislations to establish a regulatory structure tailored to crypto assets. The Financial Conduct Authority, the FCA, has initiated consultations covering everything from custody and issuance of stablecoins to essentially regulations for crypto firms. These steps reflect a coordinated effort to build a framework that is both progressive and robust. Institutional interest in digital assets is surging. According to 2024 data, over 90% of major financial firms across the region, including the UK, are already exploring or testing crypto-related services. 90% of major financial firms across regions, including the UK, are already exploring crypto. This growing adoption demonstrates not just curiosity, but recognition of the strict advantages of blockchain offers: faster transaction, lower fees, enhanced transparency, and reduced fraud. This momentum must now be matched with the regulatory environment that supports institutional adoption. Without clear guidelines and legal certainty, financial institutions are unlikely to fully commit. Ripple's summit emphasized that a well-designed regulatory system is essential to unlocking the sector's full potential. A key discussion point at the London summit from Ripple was the importance of observing and learning from regulatory approaches in other jurisdictions. The UK must aim not just to keep pace, essentially not just to keep pace, but to lead. To do so, it must ensure its regulations are essentially with global frameworks. This avoids conflicts, essentially obligations for cross-border firms, and makes the UK a more attractive basis for digital financial operations. That's a very key factor that Ripple essentially pointed out to, that the rules and regulations that come from the UK must align with others, which was essentially what was discussed in New Delhi G20 summit in New Delhi, where they said cryptocurrencies should have the same rules and regulations like planes have in the sky for every country, so that there's no tensions. When it comes to cross-border payments, they're all on the same page. Stablecoins are quickly emerging as a foundational layer of digital economy. The UK has taken encouraging steps by proposing regulations that allow essentially overseas issued stablecoins to circulate domestically without requiring local issuance. This approach positions the UK as an exclusive, flexible hub for global financial activity. Ripple and Summit essentially participants underscored the urgency of finalizing stablecoin legislations. Delays could mean losing out on economic and technological benefits, and these digital currencies offer particularly in areas such as remittances, real-time payments, and on-chain settlements. Tokenization. The digital representation of real-world assets is poised to revolutionize capital markets. From real estate to government bonds, tokenized assets essentially promises faster settlements, improved liquidity, and broader investment access. The UK's government has already shown initiative through the FCA and the Bank of England's digital security sovereign bond, Digit. However, the summit essentially made it clear that more must be done, and legal, tax, and regulatory barriers continue to limit the full scale of adoption inside the UK. A bold and clear national strategy for tokenization could place the UK at the forefront of this transformation. Blockchain technology is more than just an enabler of digital currencies. It's a catalyst for economic inclusion and operational efficiency. By removing essentially decentralized ledgers, blockchain enables lower-cost financial services, expands access to credit and investment tools, and reduces errors and fraud. The broader adoption of blockchain could also generate high-skilled jobs, attract foreign investments, and spark the growth of dynamic fintech ecosystems. These outcomes directly essentially align with the UK's government's top priority, sustainable economic growth. The message from Ripple, London Policy Summit, was loud and clear. The UK has once-in-a-generation opportunity to lead the future of finance. Just to point essentially a much more clearer point of view, the world is pretty much run by three groups. I know people like to say it's run by multiple families, but it's just to keep it on the paper, on the books. It's pretty much run by three groups. Washington, D.C. is a province pretty much outside the United States. It represents its own. Washington, D.C. is the political side of the world. The city of London essentially is a province of its own. It's not inside the UK. It's the finance of the world. And the Vatican is pretty much the religion. It's the empire. So that is what they're referring to when essentially Ripple says to unlock the full potential, essentially. This is what Ripple is referring to when Ripple says to London. The message from Ripple's London Policy Summit was loud and clear. The UK has a once-in-a-generation opportunity to lead the future of finance, because they already do. But leadership requires urgency, innovation, and movement. To unlock the full potential of digital assets, the UK must deliver a regulatory framework that encourages participation, removes friction, and supports innovation at the scale. With the right approach, the UK can establish itself not just as a participant in the digital economy, but as a global leader. And we know for a fact that obviously America wants to become the capital of cryptocurrencies and so on, which I think Trump will achieve that 100% because he's already achieved so much for the crypto space in this little time he's had than anybody else has in all of politics inside the United States. But if London doesn't step it up quick enough, then they're going to lose that edge that the city of London has always had, which is the money edge. Honestly, the capital of money laundering is pretty much, Now, USDC and XRP Ledger. So we all know that obviously USDC went on the XRP Ledger, which is incredible news, and the crypto market couldn't react because there's a war going on. USDC now on XRP Ledger via Uphold integration. So if you're somebody that uses Uphold right now, you can have access to USDC on the XRP Ledger, which means it's cheaper because USDC used to, it still operates on Ethereum, but it's expensive. But now USDC is on XRP, which means it's cheap and fast and reliable. Global digital finance platform Uphold has made an official announcement that it has onboarded USDC into XRP Ledger as a strict step towards enabling its global users to carry out cross-border cryptocurrency transactions more conveniently. Uphold tweeted in a recent statement that deposits and withdrawals of USDC to and from its users' accounts and external XRP Ledger address are now available and give the users more flexibility and quicker settlement times. The investment is set to forfeit essentially increasing utility of XRP Ledger, which is broadly essentially noted to be fast and much more essentially in terms of transaction costs, much more lower and scalable. The XRP Ledger's financial essentially incentives created by Ripple promises to interlink financial institutions, payment providers, and individuals to provide a decentralized framework that can be useful in effective global payments. Uphold is facilitating the integration of traditional financial systems with blockchain-based payment systems by launching a USDC, one of the most essentially leading essentially stablecoins out there on the XRP Ledger. The combination of both offers access of Uphold clients to robust XRP Ledger networks where they can send, receive, and store XRP Ledger without essentially limits, easily also provided with low essentially conceits of liquidity. And the overall mission of Uphold is that to provide simple access to any digital essentially assets across many different blockchains. This change comes as a chance for entrepreneurs, traders, and developers working on crypto to allow them to utilize the advantages of both controlled stablecoins and proven ledger technology to implement in real-world access. So, and the launch that comes at a time of a great regulatory change around stablecoins in the US as the Genius Act essentially being passed by the Senate. Perfect timing for everything. Just want to say one thing. If you are somebody out there that thinks, even for a second, and I know a lot of people inside the crypto space are probably thinking this, that the bull run is done for, the alt season is never happening, and crypto is pretty much going to go on pause, this year completely, nothing's going to happen, nothing major is going to happen, and so on. Going back, because it's key, going back to the Economist cover that comes out every year. Every year, the Economist releases a cover of what's the road ahead, and they call it the road ahead of 2022, 2023, 2024, 2025, and so on. And now we're to 2025. And the road ahead for the Economist, the pictures it showed, with the eye and the atomic sign right next to the charts going up, right next to the charts picture, all indications of what's happening. The eye essentially representing the distraction, the atomic sign inside the eye representing the nuclear war that's going on between Iran and Israel. The markers right next to it going up represents the rules and regulations which happens inside the market space. The M2 money supply printer that's just turned back on, which adds liquidity towards the market space, which makes the crypto market space go up in price. Referring back to the first time when Qasem Soleimani back in 2020, one of Iran's most brutal essentially commanders, taken out by an airstrike from the US. Bitcoin reacted a positive way. Crypto reacted a positive way when that man was taken out back in 2020. Crypto shouldn't be reacting in a positive way when anybody dies. Just be fairly honest. Crypto shouldn't be reacting in a positive way when anybody dies. But it did react in a positive way when that man died from Iran. The brutal commander essentially Wassim Soleimani, reacting positively back in 2020. You fast forward to today, where this war is going on right now. When this war essentially topples, Iran's about to topple very soon. And just at the same time of this war going on, US aiming for that capital of cryptocurrency, Trump saying big investments are here for cryptocurrencies. Institutions around the world, as I explained, are buying small amounts of crypto here and there. Rules and regulations have been established not just inside the United States, but everywhere else around the world. Countries are getting more involved in cryptocurrencies, more into regulations. And even according to a report that was from the UK, 90% of institutions, including the UK, are in cryptocurrencies, either exploring cryptocurrencies or hold certain amounts. 90%, including the UK, institutions. So while that war is going on, and everything that's going on in the Middle East, at the exact same time, a lot of preparations are being made for the crypto space. And we've always said we need something for that switch. We need a big, massive distraction for that switch. Well, here's the distraction. And it's a pretty big one. It's a nuclear one. On that note, we have also reached the endings of tonight's live. And if anybody hasn't checked it out, go and check out my post on The Economist. And I said, everybody remember the Economist cover, where it clearly shows what's about to happen next. Go and check out my post on X, and you'll see what I'm talking about. The Economist cover hasn't lied. Every year, it releases what's going to happen next. It shows you the road ahead. And it's pretty damn accurate. You can ask any AI chat model you want. You can ask anyone you want. That cover doesn't lie, and it's pretty damn accurate of what's going to be happening in that year. And they release it at the beginning of the year to tell you what's going to happen. Go and check out my post on X. If you're a CMF member, I've posted that link of that post on X inside the Telegram group. Go and check it out. And you have a better understanding of what I'm trying to say. So, if you're watching this for the first time ever, this was called the CMF Live. My name is Miles, and I host this live that you're watching Monday to Friday. You can tune to this live 10 p.m. London time. You can tune to this live where I share the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations. I pretty much tell you what's happening essentially around the world and how close we are to this digital future that we're heading towards. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. We always do Q&As in this live as well. And this was episode 322 of the CMF Live. This was episode 322. For episode 323 of the CMF Live, tune in tomorrow. Before we do go, let's go to the comment section first, and then we'll go... And then obviously we'll come to the ending of tonight's live show, but let's just go inside the comment section first. Hi, Miles and family. Welcome back, Miles. Let's go, Alex. Good to see you. How you doing? Robin says, will CFX token be used as China's future Belt and Road Initiative blockchain platform led by a complex network? It's a possibility. Miles, is it true that the supply of XRP is running low? Yes, it does. It's not running low, but it does burn on every transaction. That's true. Freedom Forever, good night, Miles and CMF. Thanks for the great news, Miles. See you all tomorrow. Let's go. See you tomorrow, same time as usual. Thanks, Legend. Great insight as always. 19 days CMF. Let's go. See you tomorrow, same time as usual, Shelly. Use the nuclear to make everyone worry. Yeah. JP, good night, Miles, and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual. Miles, missed your show again. Problem, Christopher. Rewatch it. Trust me. If you joined in at the middle of this live show, towards the end of this live show, go back for your own knowledge and rewatch this live show. Because the beginning part of this live show is something that everybody needs to know about. Go back and rewatch it if you tuned in from the middle or towards the end of the live show. Go back and watch the beginning part of this live show. Trust me, you want to watch it. I remember you saying this ages ago. Exactly. Great live, Miles, as usual. Good night, Miles and CMF. Jason, let's go. See you tomorrow sometime as usual. What is your X love for beauty? My X account name is CM Founder. So CM Founder, or you can type in Crypto Miles. I would come up with a blue tick. But my handle is CM Founder. I remember you saying as usual. Let's go, Jason. Let's go. Good night, Miles and CMF. Mike, see you tomorrow, same time as usual. Another great show. Thanks, Miles. Anyone new, I highly recommend. Miles is the best. I'm very grateful for him. Let's go, one love. Thank you so much for the kind words. Thanks for your time. Let's go, Woodhouse. And see you tomorrow, but at the same time as usual. Again, if you tuned in at the essentially middle part of this live show, towards the end of this live show, go back and rewatch this live show. Trust me, you want to watch the beginning part of this live show. And if you're watching this for the first time ever and you followed and subscribed to me, thank you so much for following and subscribing. If you liked and retweeted this live show and you're watching this on X and you liked and retweeted, thank you so much for liking and retweeting. If you're watching this on YouTube right now and you like the live, thank you so much for like as well. I will be seeing everybody tomorrow, same timing as usual. Love you all. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual.